Good evening, traders. Adam here from Bull Logic, doing our market analysis with you this evening. All I can say is wow. We finally got what we've been waiting for, the announcement out of the Fed. Ben Bernanke came out and told us that they're going to go ahead with QE3. He's been hinting at it all along. They finally pulled out the bazooka and shot it off. We now have an uncapped uh, QE3 that's looking to purchase mortgage-backed securities where they hope to lower home prices, stimulate the economy, bring people jobs, etc., etc. It looks like the world's saved, so yay! There we go. The ECB, the European Central Bank, last week they announced that they were going to do bond purchases to help the European debt crisis. We released our QE3. China's talking about the stimulus plan and cutting rates. So the world's all healing itself through government intervention and buying, buying, buying. So who knows how that's going to come out in the long run. I'm not an economist. I'm not smart enough for that job. But all I can say is ride it in the short term while it's happening. Today we were up 1.63%, a little off the highs. We broke out of our flag pattern as we've been talking about and noted here during the week. We came up and broke through our lower or the upper boundaries of our channel. We pretty much cut through that like a hot knife through butter. And now we're above it to making multi-year highs. As you can see, market is breaking out nicely up into the 1460s. We are getting extended. We didn't have a big enough consolidation that we never really left being overbought, so we are getting extended. Again, I don't really like loading up on a bunch of longs here, and I also don't want to load up on many shorts just because I think that's going to be fighting the trend the entire way. Over the next couple of days, I'm expecting to see, or going into Friday and in the next week, I expect to see some consolidation, maybe some slight pullbacks. I don't really expect us to get rid of many of our gains. I don't expect these whipsaws that we've had at the couple months ago to actually come back. I expect a little bit easier time, work out through time where we just consolidate sideways like we did for most of August, where we pushed sideways for a lot of it before we made our leg higher. So that's what I expect to see, and I'll tell you why in a couple minutes. Russell, as with everything, broke out to new highs. Came out of that flag pattern, broke out over those multi-year highs. Still very overbought. Let's throw a Bollinger Band on this, see where we stand. Yeah, see, we're starting to poke outside the Bollinger Bands a little bit, so we definitely need some sideways movement to pull us back in. The last couple of times that we have poked outside the Bollinger Bands, it's lasted maybe a day or so, and then we went sideways or pulled back. I expect the same thing here, just because we can't keep this run up going forever. We are going to have to stop and take a break just so people can get involved. Let's look at those Bollinger Bands on the S&P. Yeah, we are pretty good out on the S&P with the Bollinger Band, so that's definitely something we're going to want to work off and get back into. NASDAQ again posting nice gains as Apple today made it to all-time highs. As you can see, finally broke that nice 683 level. Our play on Apple, our option play with buying a straddle at the 60, it worked out nicely, made good profit on that. Hopefully some of you caught it. We had a post on it a couple of days ago. Make sure you check it out. Looking at the VIX, this is the big tell here. We sold off like crazy after the news was out. That's why our volatility was pushing a little bit higher. It's just because we were waiting for the Fed announcement. Now that it's over, the VIX dropped 11%. Is now down back into the 14s, and I would expect that it goes lower. I would expect that we have a lower volatility market from for a while now. So maybe even into the end of the year, we'll probably fluctuate around the 16s, 14s, 16s, I would guess. The VIX term structure, as we were pointing out yesterday, we were in backwardation. As you see, the cash yesterday was over the September futures. That is now gone. We're back into contango, which is the norm, which is a more bullish sign, or not as bearish, I should say. So that was the market in a nutshell. Looking at the Dow 20, we tried to poke out through that upper channel line. We did pull back in, so we're going to have to see if we can't consolidate under this a little bit. This is a very big move. We're very overbought here, so we definitely need to consolidate somewhere between this 200-day moving average and this upper channel before we can really break out and try to hold it. Financials, of course, everything went today. No surprise there. Charts are going to be fun to play tomorrow, so definitely keep them on watch. Biotechs and technology, as you just saw, all were nice. So again, just be careful going in heavy longs. I'm not going to really look for heavy longs here. We've been saying this a lot here lately. You just don't want to get over leveraged going into this market because it's already pretty overextended. Sooner or later, it does need to consolidate or pull back. If it makes another run, then I definitely wouldn't want to be the one chasing it. So just be careful out there. We'll see what the weekend brings. And tomorrow we have a couple of numbers in the morning, see how they hold up and see where it's going to take the market. But like I said, I would assume that we're going to move sideways a little bit, get back inside those Bollinger Bands, work off these overbought conditions on the stochastics, and then we'll see if we can put in some more legs higher. Have a good night, everyone.